Good morning, everybody. Welcome back to another technical analysis with me, Steven. This week we're going to take a look at another American company, this one on the New York Stock Exchange American. So the market cap is a little bigger than some of the smaller hemp companies that we've been looking at. But this week, as you can see, is Level Brands, LEVB, again on the NYSE American. If we jump over to the pricing chart now, you'll see it's a little complicated. Today we're looking at two things, and we want to get a good understanding of the difference between two indicators we've talked about before, Keltner channels and Bollinger Bands. You can see both of these are channel type indicators. Here I have the Bollinger Bands shown in red and the Keltner channels shown in blue. And you can really see that the Bollinger Bands, which are based on standard deviation, are much wider, much bigger than the Keltner channels, which are not based on standard deviation. They're based on the average true range. A little bit different math, and you can see what the pricing chart does. The pricing chart pretty much for this period is pretty much staying within the Bollinger Bands. And I'm just going to close those out now. And look what it does to the Keltner channels. It's bouncing above and below the Keltner channels. And we know that every time it's above, that's pretty rare, we can predict they're going to come back down within those channels, which they've done. And if we look here, every time it's below, we can predict that they're going to go the other way, go back up. So for a lot of those reasons, people like to think of Keltner channels as reverse indicators. They're gonna identify when the trends are reversing. So it went below. Obviously, we're going to predict, since this is based on math, this is an exponential moving average in the middle, that at some point it has to come back up. It did just that. Had we predicted anywhere along here, we would have had some small gains. And then it did the opposite. There was some time above the average true range from the exponential average, which is here, and then it came back down and did another cross. Let's just add one more indicator. We're going to see the aroon, which we've talked about previously. Look at how it lines up with the crosses for these Keltner channels. Here's the aroon up, this orange, and the aroon down, which is the blue. Look at the cross, almost the same time it crossed over there. Here's another cross, two fairly frequent ones, and we had pretty horizontal movement in the actual pricing. And then another cross, a big one, really recently, February 8th, and look what happened. Exact same day, we had a cross in the Keltner channels. So this is another example of using two different indicators to back up a trend. If two things say the same, that's a good sign. What if 6 or 7 or 8 things say the same? So use different indicators, use different time periods again. And I think we got a good sense of the difference between Keltner channels and Bollinger Bands here. So thanks for spending a couple minutes with me. I hope you learned and continue diving into these technical analyses.